All right, so we're diving into Orchid Pharma today. Their Q2 report for FY25 just dropped a few days ago, November 11th to be exact. We've got the usual statements, of course, but we also have a few potential investor questions to work with. I think that'll give us some interesting insights into what the market is watching. So Orchid Pharma, for those who don't know, they're part of the Danuka Group, and it seems like their strategy is working pretty well. At least that's the impression from these numbers. So what jumps out at you from these results?
Well, looking at both the standalone and consolidated results, the revenue growth is the first thing I see. A very healthy 12% year over year for Q2, and for the half year, ending September 30th, it jumps to an impressive 22% year over year growth.
Yeah, okay, so double-digit growth is definitely a win. But it's not just about top-line growth, right? We also need to look at profitability.
Right, and on that front, things look even better. EBITDA is up 20% year over year for Q2, and for the half year, it's a whopping 44% increase. PBT, that's profit before tax, is also showing a significant increase.
Wow, a 44% jump in EBITDA. That's phenomenal. Is that beating industry averages?
Yeah, I'd say that's a strong indicator of positive financial health
Yeah.
and would definitely outperform many industry benchmarks. A few things might be contributing to this. The sales growth is a major factor, obviously. A 22% jump in revenue will do that, but they might also have some effective cost management strategies in place, something we can definitely take a look at.
Okay, interesting. We'll have to circle back to that then. What about earnings per share? How does that look?
Both basic and diluted EPS are up substantially compared to last year. So yeah, all in all, a very positive picture here.
So they're doing well across the board. Revenue, profitability, earnings. But of course the question is this sustainable? Let's focus on revenue growth for a minute. We've got a chart here showing very consistent growth quarter after quarter. What can you tell us about what's driving this?
Well, to get really granular and pinpoint the exact drivers, we need to look at, more data, maybe from their statements or other financial reports, things like specific product launches or even, expansions into new markets.
So there's more to the story then, but the fact that it is so consistent suggests they're doing something right. And at least so far, the market seems to be responding well. All right, let's move on to profitability then. Everybody loves bigger profits, right? What stands out to you in that data?
We've got another chart here. This one shows us EBITDA, PBT, and PAT, all as a percentage of sales. And what we see here is a very clear and significant improvement in profitability.
Okay, so not just making more money, but they're squeezing more profit from each dollar of sales. And what can we attribute that to?
So if we break it down, the gross margin percentage has been relatively stable, meaning the cost of producing their goods hasn't really changed much. The real change is in the employee and other expenses as a percentage of sales. Those have gone down, which tells us there's better cost control. To be clear, the gross margin, that's the difference between revenue and the cost of goods sold, all divided by revenue. Basically, it shows the portion of every dollar they keep as gross profit.
Now, we actually have an investor question about that. They specifically ask about Orchid Pharma's cost management strategies. So is this lower expense rate a sign that they've figured something out?
Yeah, it's definitely a strong indicator that they're successfully optimizing costs. We need more details to see what strategies they're using now.
Okay, that makes sense. So we've got strong growth, we've got improving profitability, but there's got to be some kind of challenge, right? What should we be watching out for?
Well, the auditor does emphasize this one point, this whole land lease situation.
Okay, so let me break this down for everybody. Orchid Pharma, they lease some of the land they use, and well, the lease agreements on some plots, they actually expired a while ago. It was before the company went through that corporate insolvency process.
Right, and as part of their restructuring,
Yeah.
they can review these agreements. And when they compared the current rent to market rates, well, there's a big difference. The old rent is way higher than the property's worth now.
Ouch, so they might be overpaying.
Yeah, so they're in discussions with the lessor, either to renew the lease at a lower rate or maybe even buy the property.
So that's definitely something to watch then. It could be a drag on profits if it doesn't go their way. Well, I guess we'll have to wait and see how that plays out. But in part two, we'll dive into those investor questions and get into the nitty-gritty of Orchid Pharma's strategic moves. So stay tuned. All right, so welcome back to our deep dive into Orchid Pharma. We've uncovered some pretty interesting stuff so far. Strong growth, good profitability. But then there's that question mark around that land lease. For now, though, let's shift gears a bit
Mm,
and dig into some of those investor questions. These questions are often a good indicator of what the market is really focused on.
right. It gives us a peek into what investors are thinking, what they're worried about, what excites them.
Exactly. So let's put on our detective hats and see what we can find. The first question here is about, well, Orchid Pharma's investments, specifically that 400 crore rupee QIP they did back in June 2023.
Ah, yes, that qualified institutional placement. They raise a significant amount of capital there.
Right. So the question is, how are they using that money? And what does it tell us about their long-term plans?
Well, they've outlined a few key areas. A new manufacturing facility, paying down debt, capital expenditure for their API facility, and then some general corporate purposes.
Okay, so it sounds like they're taking a multi-pronged approach to growth.
Yeah, it's not just about expanding or reducing debt. I think these investments point to a bigger vision. The pharmaceutical industry is always changing. New technologies, new regulations, global competition. These are all things Orchid Pharma has to deal with.
It's a tough industry to be in, that's for sure.
Absolutely. So to stay competitive, to thrive even, they can't just react. They need to be proactive. And these investments are a sign that they're doing just that.
Yeah, I mean, a whole new manufacturing facility is a big deal. That tells me they're pretty serious about growth.
Definitely. It signals to their competitors that they're in it for the long haul. This isn't about short-term profits. It's about building something for the future. Maybe they'll use this facility to enter new markets or expand their product line or even become a major player in contract manufacturing.
So they're not just trying to participate, they want to lead.
Exactly.
And it's not just the new facility, right? They're also investing in their API facility. That should improve their efficiency and capabilities.
Right, which gives them an edge in terms of cost and quality.
And we can't forget about the debt repayment. That's got to help them financially.
It definitely reduces their risk
Mm.
and makes them look better to investors and lenders.
Okay, so these investments seem pretty strategic, but what does this mean for their position in the market? How do they stack up against their competition?
Well, to really answer that,
Hmm.
we'd need to compare what they're doing to what their competitors are doing.
Right, like what kind of investments are other companies making?
Exactly. But even without that information, we can speculate a bit by expanding, improving efficiency, and strengthening their finances. Orchid Pharma is putting themselves in a good spot to compete on price, quality, and innovation,
Yeah, those are all important factors in this industry.
for sure. And this isn't a one-time thing for them either. They have a history of smart acquisitions and investments.
So they're playing the long game.
Exactly.
All right, let's shift gears for a moment. We've talked a lot about the positives, but what about the challenges, like that land lease situation we talked about?
Right, that's definitely something to consider.
What's the worst case scenario there?
Well, the worst case is that they can't reach a good agreement with the lessor. They might have to keep paying that inflated rent,
Mm-hmm.
which would obviously hurt their profits.
Yeah, that would be a problem.
And it's not just the immediate financial impact. Investors might get spooked, which could affect their stock price and make it harder to raise money in the future.
So it's a bit of a dark cloud on an otherwise sunny horizon.
That's one way to put it. But they are trying to resolve it. And that recent QIP shows that investors still have faith in them.
Yeah, I mean, raising 400 crore, that says something about their ability to get things done.
It does suggest a certain level of competence.
So it's something to keep an eye on, but not necessarily panic about.
Right.
Okay, so shifting back to the positive, let's talk about those profitability numbers. We saw some big jumps in EBITDA and PBT.
Yeah, those were impressive.
I was especially impressed by that 44% jump in EBITDA for the half year.
It was a strong performance, especially when you consider that it came on top of that strong revenue growth. They're not just cutting costs, they're growing their top line too.
That's the ideal combination. So what does that tell us about their efficiency and cost management?
It tells me they're doing something right. To really understand it, though, we'd need to see a more detailed breakdown of their expenses.
Right. Like what's driving that improvement?
Exactly. Are they cutting overhead, improving their supply chain, maybe using new technology to streamline things?
So many possibilities.
And remember, we had that investor question specifically about their cost management.
Oh, yeah. So people are definitely paying attention to that.
For sure.
So based on what we know, what can we say?
Well, the fact that their employee and other expenses as a percentage of sales went down, that's a good sign. It suggests they're managing their resources well.
like finding hidden efficiencies.
Exactly. And it's not a one-time thing either.
Yeah.
Their profitability has been improving for a while
So
now.
it's not just a fluke.
Right.
Okay, so we've got a company that's growing, improving their profitability, and investing in their future. But they also have some challenges, like that land lease issue.
It's a mixed bag, but definitely an interesting one.
All right, well, on that note, we'll take a quick break, and when we come back, we'll look at what all this means for investors and what to watch for in the future.
All right, welcome back to the deep dive.
Yeah.
I think we did a pretty good job dissecting these Q2 financials for Orchid Pharma, and we've uncovered a lot of interesting things. Strong growth, improving their profitability, investing strategically, but they're also, facing some challenges, that land lease situation being the big one. So now for the million-dollar question, what does this all mean for investors? Is Orchid Pharma a buy? Well, it's tough to say for sure. There are no guarantees in finance.
Right, of course.
But for what we've seen, Orchid Pharma is sending some pretty positive signals.
Yeah, those numbers were pretty good.
The growth, the profitability, the strategic investments.
Mhm.
Those are all things investors look for.
They're checking a lot of boxes, for sure, but we also have to consider those uncertainties.
Right, absolutely. The land lease is a big one.
Yeah.
And then there are always those, external factors.
Right, things outside their control.
Things like currency fluctuations, regulatory changes, unexpected market shifts.
So how do you weigh all that? How do you decide if it's the right investment for you?
It really depends on your individual situation,
Mm-hmm.
your risk tolerance, your investment goals.
Right, everyone's different.
But purely from a financial perspective, these results are encouraging. They're a good starting point for further analysis.
So let's say you're interested. You see the potential. What are the key things to watch in the coming months to see if this positive trend continues?
Well, first and foremost, that land lease situation. Any updates on that will be important. Can they get a better deal? Do they end up buying the
But
property?
it'll definitely have an impact on their costs.
Exactly. And then, of course, you want to see how those investments play out. How quickly can they get that new facility up and running? Are they seeing those efficiencies from the API facility expansion?
It's all about execution.
Couldn't agree more.
And we should also keep an eye on their profitability.
Right. Can they keep those margins up? Or are they finding new ways to optimize their costs?
And then there's, the big picture stuff.
The overall market, regulatory changes, unexpected events.
Yeah, it's a lot to keep track of.
But that's what being an investor is all about, staying informed.
Okay, so zooming out a bit, we've talked about Orchid Pharma's performance, their strategies,
Right.
but where do they fit in the bigger industry picture? Are they a major player or are they still, relatively small?
Well, we need more data to really answer that. But based on what we do know, I think they have ambitions to become a bigger force in the market.
Yeah, those investments definitely suggest that.
Especially that new manufacturing facility. That could open up a lot of new opportunities,
So a lot of potential for growth.
as long as they can execute effectively.
It all comes back to that, doesn't it?
It does.
All right, I think we've covered a lot of ground here today.
We have.
So what's the big takeaway for our listeners?
Well, Orchid Pharma's Q2 results show a company that's in transition. They're growing, becoming more profitable, and investing in their future. But they're also facing some challenges.
Like any company.
Right, exactly. So I think the main takeaway is this. Orchid Pharma is a potentially compelling investment opportunity, but it's not without its risks. You need to do your homework and weigh all the factors before making any decisions.
Well said. Well, on that note, I think we'll wrap up our deep dive into Orchid Pharma. Thanks for joining us.
It was a pleasure.
And remember, in the world of finance, knowledge is key. So keep learning, keep asking questions, and keep diving deep. Until next time.